Hi, this is Matt Curfman with the Richmond Brothers Incorporated, and I am here today to give you some of market updates, economic brief, and what are our thoughts as a firm, and what are we doing with this information as far as your portfolios. Some of you who have seen me or know me may not recognize me because I'm wearing this here tie. It's not something you normally see me in. I had a special opportunity today to be on Fox 2 News as a guest host. So they had me dress up in a suit, and here's what's left of that suit. With that in mind, I'll get started on some of the topics for you. One of the factors we watch is GDP, gross domestic product. And when you look at the second quarter, the figures have come in at 4% for an annualized run rate. When you look back to the first quarter of 2014, we actually were at a contraction, so we were backwards. We were negative 2% or 2.1%. And so one quarter later, we ended positive 4%. So that certainly is a good sign. You might wonder why the big change from one quarter to the next. And what we basically look at is, do you remember winter this year? Winter was very extreme in the Midwest and all over the country. And I don't know about you, but when it was cold out, I didn't want to go out shopping and spend my money. I wanted to stay inside as much as possible when the wind chill was minus 40. So keeping that in mind, that's certainly a driver of GDP. And it does seem to be weather related, so that's a factor we're paying attention to. Second would be consumer confidence. That's a factor that is looked at often and kind of the psychology of where do people feel that we're at with the market, with the economy, with jobs, all of those things. And we've actually been slowly increasing on consumer confidence when you look at the studies. At the same time, we're not growing at an astronomical rate, but we're certainly much better off. The perception is we're much better off than we were when the recession hit back in the fall of '08 and early 2009. So with that, psychology of where we're at is very important because it's kind of the mindset. If we think the market's going to keep growing, and enough people think that, sounds silly, but it tends to work out that way. A lot of people start panicking, getting concerned. The opposite is true. So it's just something that we look at. When you then additionally add in how are the stock markets doing, stock markets are having a good run. The S&P 500, the Dow Jones, the NASDAQ are some of the major indices that people follow. And when you look at those, it's been more than 800 days now that we've had a meaningful correction. And most analysts will say a meaningful correction is a correction of 10% or less, 10% or more, I should say. And we had a small correction at the end of July, mostly focused on geopolitical tensions and had to do with Argentina defaulting on their debt. That was between 3 and 4%, depending on the index that you look at. I think it's okay to have minor corrections like that. I think it actually is good for growth and good for continued improvement in the stock markets. So here at Richmond Brothers, while it is a concern, it's something we're watching. We're not too worried about it at this stage. Another factor that we've been paying attention to closely is interest rates. Interest rates, as many of you know, have been very low. You're not earning much on your CDs, bank accounts, savings, money markets, all of those things. That's a function of the Federal Reserve short-term rate. And so that has been near zero for over 5.5 years now. The Fed has been tapering their bond buying, so we're now spending $35 billion a month rather than $85 billion a month. But as that spending comes down, what happens is it puts less downward pressure on interest rates. So as you look at your portfolios, many of you that are with our firm, we don't have a large exposure to bonds or fixed income. I think bonds could do okay this year. The question is just when do interest rates start going up? The longer we stay near zero, I think the sooner that will start happening, and owning bonds will not be an ideal asset to have going forward. So those are some of the things that we are paying attention to. I mentioned geopolitical tensions in Argentina, but really Ukraine and Russia and that conflict. And there's quite a bit going on right now in the Gaza Strip that gives us pause when we look at your portfolio. So those are things we'll continue to pay attention to. There's obviously a lot going on. That's what you have us for. And we're going to try to give you these updates in a video format once about every month or so and see if we get some positive feedback if people like them. You're welcome to email comments, suggestions, or questions to questions@richmondbrothers.com and we'll be happy to reply. And in the meantime, www.richmondbrothers.com if you need any additional information. Thanks so much for tuning in, and we'll talk to you next month. Have a great day.